Good evening and welcome to our market coverage. Let's start with the key numbers from overnight trading. The tech-heavy QQQ closed at $713, the S&P 500 ETF SPY was at $739, Nvidia held around $219, and Tesla came in at $445. The VIX, which is our fear gauge, rose 1.58% to 18.67, signaling that risk aversion is creeping back into the market. The 10-year Treasury yield moved up to 4.43%, and the dollar index edged slightly higher to 98.26. On the commodity side, WTI crude broke above $101, while Brent crude climbed past $107. Gold was at $4,703, showing a modest pullback. Bitcoin slipped below $81,000, settling at $80,806. Here is the big picture. The market is in a state of divergence and fragility. The VIX is up, crude oil is surging, and the main driver behind all this is geopolitical tension, especially in the Middle East. But here is the twist. Assets like Nvidia and the QQQ are still trading at elevated levels. That tells us money is caught between a flight to safety and a continued bet on growth. Our core call for today is that we are looking at a mix of risk-off sentiment and structural opportunities, with about 70% probability. Now let us talk about the flow of money. The usual route from Asia into Europe and then into US pre-market trading has been disrupted. Uncertainty around the Middle East is making global capital cautious. The movement from risk assets into US equities is stalling. Some money is staying in commodities or rotating into safe havens. On the macro front, interest rates are working against the market. The rise in Treasury yields is putting pressure on high-valuation growth stocks. Inflation expectations are not cooling off either. The jump in crude oil prices is direct evidence of that. And geopolitical risk remains the most visible variable, pushing oil and the VIX higher. Looking at individual asset classes, U.S. equities are likely to trade in a choppy and slightly weak manner. The QQQ is consolidating around $713, and the SPY is stuck in a range between $735 and $745 with no clear direction. Over in China, the A-share market is being driven by domestic money, and sentiment is cautious. The Shanghai index edged down slightly, while the Chi-Next index was marginally higher. Everyone is waiting for external risks to become clearer. Bitcoin is under pressure from risk aversion and looks bearish in the near term. Commodities, on the other hand, are tilted to the upside, with crude oil supported by geopolitical uncertainty. There are two main money flow themes to watch. The first is the geopolitical premium in the energy sector. The direction is long, and the continuity is strong in the short term. The second theme is the defensive growth story in AI tech stocks. This is a structural trend with medium-term continuity. Nvidia is still holding above $219, which tells us the AI order book logic has not been broken by geopolitical risks. On the trading desk, today's strategy is to lean long but with controlled positions and a bias toward hedging. If the SPY holds above $740 and the VIX falls back below 18, you can consider adding exposure to AI leaders or energy stocks. If WTI crude continues to rally above $105 and the QQQ breaks above $720 on volume, that is a signal to add to positions. But if within the first 30 minutes of US cash trading, the SPY drops below $735 or the VIX jumps above 20, you should start reducing risk. And if the SPY breaks below $730 or Nvidia falls under $210, you need to cut all longs immediately and stop out. Let me give you a few verifiable predictions for today. First, the SPY will likely trade in a range between $735 and $745, with a 60% chance of closing below $740. Second, the Shanghai index will continue its weak consolidation, moving less than 0.5% in either direction. Third, Bitcoin will stay weak in a range between $79,500 and $81,500. Fourth, WTI crude has a 70% chance of closing above $100 a barrel. And fifth, the energy sector will outperform tech by at least 1 percentage point. To sum it up, the probability for today is 25% for an up day, 45% for a sideways session, and 30% for a down day. Stay cautious and manage your risk carefully.